If you're going to start an e-commerce business in the US from Canada, or you already have a business in Canada and you want to expand it to the US, this video is for you. We're going to get into tax forms. We're going to get into what structure you want to get into. You're going to see if you even want a US structure. We're going to talk about bank accounts, whether you have a US bank account or a Canadian bank account, sales tax, and a lot of other stuff. We get so many clients who are doing a US business. They're getting their taxes filed by a US accountant or somebody who kind of happens to know foreign businesses, but they miss out on Form 5472. We've seen clients that get the automatic penalty of $25,000. The CRA just sends it to your address. They don't ask you questions. It's an automatic penalty if you file the form wrong, late, or it's done incorrectly.
If you're running a Canadian business and you have registered any LLC in the US through your Canadian business, or a corporation in the US through your Canadian business, then it means your Canadian business has to file T1134 in Canada along with your corporate tax return. If you're not filing a T1134 in Canada, you will get penalized heavily in Canada. Don't do it yourself. It's very complex and there are huge penalties if you make any mistakes.
I was sitting with a couple of friends, all CPAs. They were saying that their client has a US business and they have to do some form called T1134. When they opened it, they were just mind blown. What the hell is this form, right? It is a very complicated form, and so many people miss out on this. Is to report your holding of a US entity. And if you miss filing this form, you or your Canadian corporation, it's a $2,500 penalty, and it's not something you want to get into. It's something that so many accountants make errors in, and for that I would highly advise speaking to a cross-border accountant. I've seen so many bank accounts being closed because of bad addresses, because of bad documentation given to the bank. Just guys, please do this properly. Get a good virtual address, get good documentation supporting your case.
Hello friends, my name is Behroz and welcome to my channel. Today's video is a recorded podcast with cross-border tax experts between Canada and US. Salman is a CPA and is a cross-border tax expert, providing expert tax services for businesses trying to expand between Canada and US, or even individuals who are moving between Canada and US and have a tax liability across both countries. This has been the case with me as well, where I moved from Canada to US and hence had liabilities from tax point of view, both in Canada and US, and continue to have that liability because I still have some investments in Canada even after moving to US. Also, if you have a Canadian business and you want to tap into the US market, which is one of the biggest market in the world, and benefit from that business as well, there might be some tax implications that you need to consider. This is not as simple as you just filing your T4 statements and that's it. This is more complicated, and hence it's best to get help. Now, in case you want to reach out to Salman and his team to get their services with regards to cross-border taxation, I will leave a link to how you can reach out to them in the description of this video. I highly recommend that you check their services out and seek good expert opinion and consultancy as against trying to do it yourself. Now, in case you find value from this video, I have a special ask, which is please do press the like button as this keeps me motivated. And secondly, do subscribe to the channel as well, because on this channel I post content pertaining to how you can achieve success in your career and build wealth. If both of these topics are of interest to you, then this channel is right for you. Now let's get rolling into the podcast. Now, one important call out in case you are in Canada and are interested in building wealth in Canada. Well, I have created a special course in which I cover how to save, how to invest, and how to increase your income. I highly recommend you check out that course. It is a recorded course for which I will leave the link in the description of this video. Now, the best feature of the course is that the course comes with full refund policy without any questions asked. So in case you don't find value from the course, you don't understand it, you don't like it, well, you can ask for a full refund. Now, given that feature, I would be very surprised if you don't try and check out the course and see if it can really help you. Because on the flip side, if you are even able to improve your income or your investment return by 1 or 2 percentage points, well, that can make a huge difference and can easily pay off for the cost of the course that you will be incurring. Now let's get rolling back into the video. Alex and Salman, thank you for joining. So before we go into any of the questions I have, and I have a list of questions in front of me, let's get rolling into an introduction. So would be nice if you guys can introduce yourself and introduce what is that you bring on the table, what do you represent, what are your services. So maybe over to you, Salman, first, and then Alex, you later.
Sure. So my name is Salman. We run SAL Accounting, which is a cross-border firm, cross-border tax firm specializing in US and Canada taxes. We are based in Toronto and Mississauga, and we're helping folks just like you who've got business in Canada and trying to expand into the US and try to really capture that market. We help them navigate the US and the Canadian side of taxes.
Got it. Thank you. And Salman, you've been practicing for how long now?
So we started just before COVID. So it's been about 5 years that we've been doing this.
Got it. And I'll move on to Alex, but I would also love to understand from you, what do you cover under the cross-border altogether? Like, what are the elements in the cross-border? One is I'm familiar with, for instance, I doing a business maybe across. Second, I'm also familiar with me moving from Canada to US as well. But if there are other elements, would love to understand those as well. But Alex, over to you.
So I'm the manager in cross-border tax department here in SAL accounting. I mainly help Canadians moving to the US, closing their accounts here in Canada, declaring departure here, like ceasing their ties with Canada, how they can save most out of their taxes. Just because Canada is a high tax country, so if someone is moving out of Canada and started living in the US, so I help them doing the tax paperwork in both the countries. As Salman said, that we help Canadian businesses to grow in the US, and if US businesses, they want subsidiaries in Canada, just because big firms are operating in the US, so sometimes when they have potential clients from Canada, so they do want to register themselves in Canada. So we also help them filing the necessary paperwork in Canada.
Got it. Thank you, Alex. Thank you for introducing yourself, and thank you for also answering the question I had. So I think my question is already answered now. So we can move into the topic that we have for today. So I remember when I moved to Canada, it's very typical of being in Canada, which is I hardly find anyone who doesn't have a side hustle now. And I think this is primarily due to low income, high cost of living, and high tax as well. So people have come to terms with the fact that while they have a 9-to-5 job, there will always be something on the side. I know a friend, I know a family member who has a kitchen. They have a kitchen and they sell food and all. I have a friend who has a pet business, and hence I also started a e-commerce business. And the e-commerce business that I started was doing a dropship setup with selling yoga accessories. And I started in Canada first. So I was selling in Canada. And then I realized that the Canadian market is relatively smaller. And I have a good benefit if I can expand into US and start selling those products into US as well. Which I did without understanding any tax implications or any business implication. I just started selling using my Shopify store altogether. But I think I was also young, bit naive, not clear. Now, luckily, my business never grew to a point where I would have worried about penalties, tax implications, or maybe I should have, I don't know. But by that time, I almost closed down that business, and then I moved into social media and doing YouTube and all on the side. So now let's say there are other similar businesses, because I closed my business, but there are other similar businesses in Canada who want to expand into US. I want to understand what are the steps they need to take in order to make sure that they do it the right way. So if someone has a Canadian business already, e-commerce business, they know they want to tap into the US market, what are the steps they need to take?
Yeah. So the first thing you should do is first figure out that obviously it's a viable business and it's a viable product, right? You want to first find out the market, right? So a lot of times we've seen, you give your example, perhaps other people as well, that you start a whole business, you start a corporation, you get an accountant, you do all of those things, and then you realize you've got an EIN, so now you have US tax obligations, but you realize you didn't pick a good product. So obviously make sure that you've done the commercial side of things where you've made sure that it's something that's going to be profitable and something you want to do, and also see which structure you want to go with. And that's something obviously we'll discuss in the latter part of this video, but you want to make sure that the structure you're choosing keeps your tax obligations as simple and as easy as possible. So, and then later on, if you want to obviously dissolve it, that's also available for you, right? So I think that's a very crucial step that a lot of business owners forget, and they just jump into it without thinking which structure they're taking, with what sort of product they're going with. So probably that's the first thing we should go with.
Got it. And since you said you talked about the structure, so can you speak on the structure? What structure should we go by?
Yeah.
What are the different structures that are available, and what would be ideal for different kind of clients? So what suits who?
I'll defer
Yeah,
that to
so
you.
the best, so there are different structures based on how you want to jump into the US market. So if you're only selling on Amazon and Shopify, then the best structure is to register your existing Canadian corporation in the US as a foreign corporation. So you'll get an EIN and you can do business through your Canadian corporation. So the thing is that if you don't have a physical presence in the US, physical presence means an office, employees, like if the mind and management is in Canada and you are selling to the US market, then according to the US and Canada Tax Treaty, Article 7, Paragraph 2, your income is taxable only in Canada, not in the US. So this is the first structure. But sometimes when you do day trading, when you do setup outside of Amazon and Shopify, and the platform wants, just like TikTok store, okay? So TikTok store in the US, they doesn't allow Canadian corporations to open up a store on TikTok. So they specifically need a US citizen or an LLC or a corporation in the US. So in that case, you can do an LLC or a C Corp. I will not recommend a C Corp. I recommend an LLC, but I also not recommend to own an LLC under your individual name. So the best approach is to create an LLC in any of a tax-free state, just like Wyoming, Texas. These are tax-free states. Wyoming is good. So register an LLC in Wyoming, and that LLC will be owned by the Canadian corporation. So I'll explain you a little bit how taxes will work. I'll not go into the detail. So the main job of an LLC is to flow through the income between the partner, like the income to the partner's taxes. So here the owner of this LLC is the Canadian corporation. So by default, whatever the LLC is making in the US, so it will get flow through to the Canadian corporation, and the taxes will be paid in Canada under the Canadian corporation, and you can take the dividends out of the Canadian corporation. One important thing on the US side is filing Form 5472. This is very important, and this is applicable on US LLCs and US corporations having related party transactions. Related party transaction means if I'm the owner of the Canadian corporation and I have an LLC in the US through my individual name, which I don't recommend, or through the Canadian corporation, and the Canadian corporation and the LLC have some transactions throughout the year. So it's important to report these transactions under Form 5472. If you not file this Form 5472, there are serious penalties in the US, and the penalties can go up to 25,000 US dollar. So it's important also to do these forms in the US. When it comes to the C Corp, so C Corp is not recommended for the e-commerce businesses just because you're not having an effectively connected income with the US. C Corp comes into picture when you have effectively connected income in the US.
Can I?
Yeah.
Can I just jump in and explain that? Maybe it might be getting a bit overwhelming for people. So I can, to add to Alex's point, what effectively connected income is that, and this is if you look at the IRS's internal code, it doesn't clearly explain that, right? But it's how you interpret it, right? So effectively connected income could actually mean having any US income. But actually what they're trying to refer to here is that you don't have a physical presence there, right? So exactly what Alex said earlier. You don't have a physical store. You don't have employees there, right? We're not talking about contractors. Contractors are fine. Agents are fine. Not having actual employees there. Not having your own warehouse there. So a 3PL warehouse is fine. Lots of e-commerce stores have that. That's not your own warehouse. That's somebody's warehouse that you've just kept your stuff there, right? So when you don't have employees, when you don't have an office, you don't have warehouse, you don't have a permanent establishment or physical presence, right? Which is what Alex was saying, that your mind and management and everything, the whole business is back in Canada, right? When you don't have those things, you don't have effectively connected income to the United States. You're not a US business, you're a Canadian business, right? So Alex, I'm going to throw it back to you. I just wanted to sort of explain that part to kind of simplify it for everybody.
Okay. Now, if C Corp comes into the picture when you really wants to expand your operations in the US, like you come to a point where you're big enough to hire a team over there in the US, like you want to do your own warehouse in the US, you want to hire a team of people in the US and you want to put them on the US payroll. So this is where the mind and management is converting to the US. Like if you will be hiring a team over there, so and you're running the payroll from your company. So in this option, the C Corp is equivalent to a normal corporation. Like an Inc. in Canada, it's called a C Corp in the US. So then C Corp is favorable. Just because the downside of having a C Corp is the tax rates. So the tax rate in the US on the net profits of the C Corp is 21% federal plus state tax. And as I told you, 9 states in the US are tax free. So if you incorporate in any of these tax free states, so you'll only pay 21%, not state taxes. So if you're getting bigger, and you want to hire a team over there just because US is a big market, and you want to hire a team over there, then the C Corp is the good option. But unless you're small and you want to stay in Canada, run the business through Canada, then Canadian corporation linked to an LLC in the US is the best option.
Okay, can I add to that? Completely agreeing to what Alex said, that let's take a step back. What Alex said at the start, I want to just reiterate it, because if there's no need for you guys, the viewers, to have a US LLC or C Corp, by all means don't. Just have your Canadian corporation, because you're still, it doesn't matter it doesn't matter that you are selling to US clients, you're selling on a US marketplace. It's completely possible for Amazon, for Shopify to still honor you as a Canadian corporation. You can get an EIN, which is an employer identification number for your Canadian corporation, and give it to Amazon, give it to Shopify, and you're completely fine to keep on doing business that way. It's going to keep your US tax obligations to minimum, and we can talk about that just a little bit later, what those are. But it's going to keep things very, very simple for you, right? The other option, as Alex said, that you can have your LLC, and we can source that income back to Canada. There's a way to do that. That's a longer discussion. Again, we can touch upon that towards the end, right? But yeah, that's about it.
So one question, when do you decide you should have an LLC versus going with a Canadian corporation?
Yeah. So just for plain Amazon or Shopify, you don't need a US corporation or a US LLC. What happens is, what we've seen in practice, and this is now we're leaving sort of the tax world, we're getting into the actual practice. What happens in practice is, you reach out to suppliers or you reach out to customers, right? They're in the US, they're not as comfortable with a Canadian corporation. They want to speak to an LLC owner. They want to speak to a US corporation owner. And for that reason, you need to have a corporation, just so you can present yourself as a US business. It just feels that you're more serious, that you're actually physically there, where you're not actually. For tax purposes, you're not. Just to show yourself as being there, you have to do that. Again, if your vendors and your customers don't care about that, by all means, don't have a US corporation or US LLC.
Yes, I want to add one more thing here. So if you are purchasing from the US and reselling the products in the US, then you might need a reseller certificate. And the reseller certificate can only be issued to LLC or a US corporation. A Canadian corporation can't get the reseller certificate. So in that case, you also need an LLC.
Yeah. Let me actually go in depth, because that was one of the things I wanted to touch upon. A reseller certificate, probably guys watching this already know, is if you want to, for example, drop shipping, Barrows you talked about, if you want to buy from the US and sell to buy from a US supplier and sell to the US market, you don't want to be paying sales tax. a research certificate allows you to exempt, basically you get a research certificate, you present it to your supplier, and they won't charge you any sales tax. So I remember when I was doing my Amazon dropshipping store, I got my research certificate from Texas, because you have to see which state the warehouse where you're getting your stuff delivered, which state is that in. So mine was Texas, so I got a Texas reseller certificate, and just having that piece of paper meant that any supplier in the 50 states will not be charging me that sales tax, right? And to do that, I needed a US LLC.
Got it. Very clear. I have one more question. Maybe it's kind of a stepping back, which is, when is it that I decide that I need to even have a Canadian corporation? Can I just be on a sole proprietorship and in Canada and sell into US? Or no, it has to be a Canadian corporation before I start selling into US?
Do you want, Alex, up to you.
Okay, so it totally depends on your business profits. So if you are making less than 80K Canadian dollars, 100K Canadian dollars, then it's fine. You can earn this income under your individual name. But as soon as you start making more than 100,000 Canadian dollars in net profits, then it's recommended to have a Canadian corporation, just because if you make this income under your individual name, you get hit a big tax bill at the end of the year, just because as more you earn in Canada under your individual name, your tax bracket goes high. So after your business profits touch more than 100,000 Canadian dollars, you should incorporate. Plus one more thing, if you're making this income under your individual name, you will pay the normal tax to the Canadian government, plus the self-employment tax, CPP. Okay, so these taxes are fine unless your income is less than $100,000. But as soon as you make more than $100,000 net profits, so then my recommendation is to do a Canadian corporation in order to save taxes. Plus one more thing, if you have a job aside and you are earning $80,000, $100,000 yearly from that job, and then you want to open a business or you want to do it under your individual name. So the main thing is that don't let your taxable income cross 120K Canadian dollars. That's the point where you should incorporate the Canadian corporation.
Because simply, if you look at it, that then you're starting to hit the 53% marginal tax bracket, right? Every extra dollar you earn over your salary or over whatever base amount you have, you're paying 51% or 53%, whatever bracket that you fall under, right? It just doesn't become much of a point to do a business at that point. Whilst if you put that money in your corporation, you're only getting taxed, if you're in Ontario, for example, 12.2%, right? Much, a huge difference, right? And you keep on keeping that money in the corporation, investing it, it keeps on growing, and you don't have to pay that 50-ish% tax rate.
Got it. Okay, thank you. Very clear. One more question, which is, we are talking about more the income tax or corporate tax rates. What about the GSTs and the HSTs and sales tax? Canada might be very clear, because if you're selling in Canada, you're collecting that, and then that you kind of have to file for it. What is when I sell in Texas to a consumer or a shopper? Am I supposed to collect sales tax? Maybe I don't know if Texas has any sales tax. I live in Massachusetts, so Massachusetts does have a sales tax of around 6.5%. So if I sell to someone in Massachusetts, what do I do? Do I collect it? If yes, where do I give that money, and so on and so forth?
Yeah, the answer, Alex, you're going to take that? Yeah.
Yeah, so sales tax in the US is very complicated. It's not as simple as in Canada. So all of the 50 states in the US have different sales tax rules and laws. Taxes, you're talking about, taxes is not a sales tax free state. Taxes is an income tax free state. So sales tax free states, Delaware is a sales tax free state, I believe. Nevada and one or two other I don't have on top of my head. But if you're selling on Shopify and Amazon, you don't need to worry about sales tax. Let's first talk about the threshold. So every state has different threshold. So if you're selling to California, so California sales tax threshold is 500,000 US dollar, and there are other terms if you have more than 250 transactions, or but the main thing is 500,000 US dollars. So if your sales specifically to California customers is more than 500,000 a year, then you are subject to register for sales tax in California. New York, I believe it's $250,000. So if your sales to New York customer cross $250,000, then you have to register for sales tax in New York. Alabama, I believe it's 100,000 US dollar. Correct? I may be wrong, but it's around about that figure, 100,000. So if your sales to Alabama is more than 100,000, then you need to register for sales tax in Alabama. Now, what does Amazon do? Amazon collect if you cross that certain threshold, so Amazon collect the sales tax from the customer and remit the sales tax to the tax department, to the state department in the US. This is a good thing with Amazon. Shopify also do that, but I'm not clear about all the states, but some of the states Shopify also support
You have
collecting
to
and remitting sales tax.
you have to turn
But
on Shopify tax.
if you're selling out of Shopify and Amazon and the platforms that doesn't support the sales tax, then there are different third-party softwares. Okay, just like TaxJar. Okay, so you can integrate those softwares with your platform, and they'll automatically collect and remit the sales tax to the sales department. But if you are physically present in a state, physically selling in let's say California, so then you have to register for sales tax if your sales are more than 500,000 in California, and you have to collect and remit the sales tax to the department in the US. And one difference in the sales tax between US and Canada is, in Canada you can claim ITCs, input tax credits, but in the US you can't claim ITCs. Like the sales tax which you will collect from the customer, you have to remit as it is to the State Department in the US.
But when eventually you file for your taxes, you get the differential, right? So the sales tax you've collected versus the paid now?
No, in the US it doesn't work like that.
Oh, wow. Okay, I didn't know that.
Because you've already, Alex, obviously you're more expert in this. Is it because you, having your reseller certificate, you've already not paid any sales tax? Is that the whole point of it, right? Because you should, what a business should do is get your reseller certificate, don't pay any tax when you're buying, and only collect the tax, right?
That's the whole point of reseller certificate. If you're purchasing goods to resell the goods, then you don't have to pay the taxes on purchasing the goods.
Correct.
Yeah, guys, guys, for those watching, if you've dealt with this something differently, or if something has happened to you which is kind of a departure from this, let us know in the comments. It'll help everybody learn.
Thank you for saying that, Salman. This is helpful. So just staying on the tax piece, one more question, which is, what if you're below threshold? Amazon is still collecting sales tax. What happens to that sales tax amount?
The Amazon will submit that to the State Department in the US.
Even if you're below threshold?
No, if you're below threshold, then Amazon will not start collecting the sales tax, yes.
Oh, nice.
If your store, Amazon will calculate the threshold based on your store sales. So if your store sale in that specific state is less than the threshold, then Amazon will not collect the sales tax.
Got it. Okay, clear. This was really helpful. So now let's move into the next part, which I wanted to understand is, I'm doing business in US. I'm making money there, but where? So let's say I'm making money with Amazon. Amazon sends me money where? In Canada, in US? Do I have a bank account? A bank account where? Yep. How does all of this banking and transaction and money movement works?
Yeah. So before we answer that, let's take a step back. The answer completely differs based on what corporation you have. So let's take the simpler one, having a Canadian corporation, right? If you've got a Canadian corporation, make life simple for yourself, have a Canadian bank. All of the major high street banks have cross-border banking. So for example, BMO, they call it BMO Harris, you've got TD, CIBC, and all of them, right? So go to your bank, wherever you have your business bank account, open a US account, or I think it's called a borderless account in Canada, a US dollar account, and then also open a cross-border account in the United States. So for example, TD has TD Canada Trust here and TD Bank in the US. So you're going to open your US dollar account in Canada and your US dollar account in USA. You're going to link your US dollar account in USA to your Amazon store, and that's where you're going to receive your money, right? Having that cross-border relationship with the same bank is helps you, because then you can easily transfer it into your US dollar account in Canada, right? One thing I would advise, one thing that helped me is that having a US dollar credit card. So then whenever I'm purchasing anything, I don't have to translate it back to Canadian dollars. And then when the money comes, I don't have to translate it back to Canadian dollars. And then again, when I'm paying somebody in US dollars, I have to translate it back. Having a US dollar credit card means you can receive your money into your USA bank account, bring it to Canada, again in US dollars, pay a US dollar credit card, and you don't have to convert anything, right? Now, if you've got an LLC or a C Corp or any sort of US entity, what to do there? Over there, the best option is to travel to the US. You could drive to Buffalo or whatever, or fly there, and open a physical bank account there, right? So you could open Chase is normally known to be very good with this, right? Bank of America, I've personally heard that for foreigners, it's very difficult to open bank accounts, right? So you want to think about that a little bit. Something that people from Canada, they might just see a TD branch in the state of New York, and they might just want to go there. One thing you might want to be a bit mindful of is just, I think, late 2024, TD Bank was very heavily fined for not keeping good documentation of foreign bank account owners. So it's my presumption that they're going to be very, very strict going forward. So you might want to avoid TD, go for Chase, probably avoid Bank of America. Now, if you cannot travel, right? And the reason I suggest traveling is because when you physically go into a bank account, it's going to make the success rate of your application much, much better, right? And we can talk about a couple of other things. But if you cannot do that, then you have a couple of online options, right? You have got Mercury, which is very popular. You've got Payoneer, you've got Wise, right? Those are usually for folks that cannot travel. As you're going through this, something I want to mention is to make the chances of success of your bank account opening much, much better and much, much easier, is best to do two things. One, give as much detail as possible about your business. So we suggest this whenever you're going to the IRS, don't give details. Just say, yeah, I'm just opening a little bit of a small store in the US. But with the bank, you want to give as much detail as possible, because it'll give them the comfort that you're going to open a big business that's going to bring them business, and they want to have that relationship with you, right? Second thing is, you're going to want, obviously, to have a US address. A lot of times what people that have LLCs or C corporations, they get a registered agent service, and they just provide the bank address, the address that came with the registered agent. Problem is, 20,000 other people have the same address. The bank's not going to value you in the same way, right? And the problem in recent years, especially with e-commerce, is half of those are sort of being operated from halfway across the globe. Some of them are doing fraud. Some of them have other issues. The bank's it's going to raise flags, right? What you want to do is, if you want to get, it's very cheap and very easy. Just go Google US virtual address, right? Don't go on the first page of Google, because everybody's clicking on that. Go to the third, fourth, fifth page. Try to find a virtual address that somebody isn't using, right? And the good thing is that it doesn't have to be exactly in the state that you have your LLC or your C Corp in, okay? So as long as you're giving them some address in the States, it's usually fine. It's called a physical or address. Just go for any virtual address that you think that other people won't use, right? Something that's not in the first 2-3 pages of Google. So having a good address and having a good application where you're giving a lot of details is going to make your success rate with the bank much, much better, right? Going physically versus going virtual would obviously make a difference.
Got it.
And
Those are
also,
your-
if someone living in US, your friend, family member, so you can use their address as well. It's just for the
that's gonna improve your.
communication purposes. They're not gonna file taxes or pay taxes on your behalf. It's just for the communication purpose. Like IRS can communicate on that address. Like anytime IRS wants to send you a document, they'll use that address to send the document.
That's gonna significantly increase your chances of getting a bank account,
Exactly.
and bank account that doesn't get closed. Opening a bank account is one thing. Maintaining it and seeing it through till the next few years is one thing, right? So many banks start to then close bank accounts as soon as some flag goes off on their side. One more word of advice, that try in your bank application to keep it as vanilla as possible. Don't put any quirky things. Like I remember we opened a LPGP structure. Let's keep it simple. We opened a US structure where it was three partners. One of them was a minor, right? We thought it wouldn't be a problem because the entity is opening the bank account, not the shareholder, but the bank rejected it, right? So try your best. Obviously, if you're a minor, you can't do anything, but that's probably not going to apply to most people. Just try as much as possible to show that you're a valid business, that you're there for good, and you've got some foothold on US soil.
Got it. Anyways, guys, thank you. This was wonderful information, and thanks for coming in. Any last word of advice, any last input, suggestion from you guys before we call it end of the podcast?
Okay, thank you, bros. Just want to add one more thing before we close this podcast. So I want to talk about some important forms which we need to file, both in the US and Canada. For the US side, I already told you that 547 form when you have an LLC and inter-party, like related party transaction. So that is important. And the fines for not filing the 547 to 25,000. On the Canadian side, if you have a Canadian corporation and you register the Canadian corporation in the US to get an EIN, so you also have to file a treaty-based tax return in the US. The forms which you need to do in the US is 1120F and Form 8833. So the Form 8833 will show that tax treaty about the physical presence in the US, like a Canadian corporation has no physical presence in the US, and the sales the Canadian corporation is making from the US market is not taxable under the US and Canada tax treaty article this, paragraph this. This is for the Canadian corporation registered in the US. But if a Canadian corporation is the owner of the LLC, or if the Canadian corporation is the owner of the C Corp, then the Canadian corporation also has to file, like Canadian corporation has to file a corporate tax return in Canada, but along with the corporate tax return, the Canadian corporation has to do a form T1134. It's very important, complex, lengthy, and missed filing this form, there are serious penalties in Canada as well. So keep in mind, if your Canadian corporation or even individually, you have an LLC in the US or corporation in the US, you have to file T1134 in Canada. It's very important. So these are some forms which I thought I should share at the end of this video. So thank you, Beros, for doing this podcast.
Got it. You know what I concluded after you just said about all these forms? That it is more than ever important, or it is far important, that you should go with an expert. I am a business expert. I can sell the business. I can do business. But these filings and filling out these forms, they are not just complicated, but the issue is you make a mistake, you miss on anything, and then there is huge penalty, and you end up trying to just save a few dollars by not getting the right help. You end up paying a bigger bill. So after listening to you on all this, because there are some things which I'm from the finance background. So even I kind of, my brain mutes out on some of the things that you were talking about. And it's not that you were saying something wrong. It's just that they are complicated and it's not my expertise. Imagine someone who's not from the finance background and is running a business. So I highly recommend to anyone listening, don't try to do it yourself. This is one of those things where there should be an ad at the bottom or line saying, don't do it yourself, rather get help from.
Don't do this at home.
Exactly. Don't do this at home. Anyways, guys, thank you for joining in. I know you have more services that you offer other than just helping people or businesses to expand into US. There are other tax filing or tax related or business related services that you offer. What we will do is we will continue to call you more and more to cover on those topics as well, because I'm sure there is audience for that who can benefit from this. So thank you for coming in.
Thank you.